The last couple of times Palantir have released their earnings, my main takeaway each time has been that it was the best set of results the company ever delivered. Once again, we're seeing growth accelerating quarter over quarter from 63% to 70%, with a Rule of 40 score once again climbing to 127%. Ontology and artificial intelligence enable exponential outcomes in a world that thinks linearly. As it was said and mentioned on the earnings call, this is not just growth. This is compounding acceleration. As you can see, I hold shares of Palantir. It is my second largest position. I'm up over 600% on my initial investment. And I think we have so much more room to grow. I think with Palantir being a monopoly, Palantir still not having over 1,000 customers, Palantir continuously improving their net retention rate, and Ontology still being such a low penetrated market, I think we have so much more runway for growth. Now in this video, I'm going to tell you my thoughts on the report Palantir delivered. I'm also going to tell you my thoughts and my updated valuation model on the company, and telling you my thoughts on the valuation. In my opinion, AI has reached a stage where the market and customers want to see what AI can actually do. It is therefore no longer enough to simply talk about artificial intelligence and say how transformative the technology is. It is time to show it, and Palantir is showing it, and they have been showing it since Q1 2024. In this earnings report, Palantir left a couple of examples of companies that employed Palantir's AI FDEs and employed Palantir's ontology, and telling you just how transformative the technology has been for the companies. As customers at Johnson Controls said, "It is really incredible to see that you can transform a 140-year-old company with the power of AI. Palantir sits downstream of value creation. They do not make money if customers do not experience efficiency gains and if customers cannot use the products." So heading back to this show me, don't tell me, Palantir really does show you. They don't just tell you, they show you. They are downstream from value creation, and we're gonna look at this right now, but they don't make money if the customers don't make money. Another customer, Lear, used Palantir's products and started with 100 users and 4 use cases, and has now scaled to over 16,000 users and 280 use cases. This demonstrates products that are not only transformative, but enormously scalable. I mentioned in my previous Palantir video, and one of my core elements in the Palantir thesis is that this product, Ontology Foundry, is infinitely scalable. It has so many use cases, and it can be used and applied in so many different contexts, from atomic companies to rocket ship companies to sandwich companies to pizza stores to supply chains to supply chain management to shipping to infrastructure creation, to production, to the military, to the FBI, to CIA. All these different agencies use Palantir. All these different types of customers are customers that use and employ Palantir products. Insurance companies, banks, and sandwich companies, right? Such a broad range and so much scalability. And this is why their net retention rate of 139% is extremely impressive, as it shows that existing customers continue to use Ontology more than before. We saw this with the Lear example. Now I'm going to show you a clip of management talking about this.
Lear noted at our recent DevCon conference their experience starting with 100 users and 4 use cases, and growing to 16,000 users and 280 use cases. We're seeing the effects across our entire customer base. Existing customers are expanding faster and larger. For example, a utility company expanded from $7 million ACV in Q1 2025 to $31 million ACV by year-end, while an energy company expanded from $4 million ACV in Q1 2025 to over $20 million ACV by year-end, driven by value generated from new use cases.
Now, in my opinion, one of the most important metrics for Palantir and measuring Palantir value creation is their net dollar retention rate. So how much more and how much incremental money do they get from their existing customers? I'm going to play you a clip right now of management talking about this and saying how their top 20 customers improve their spending and keep on spending more on the platform.
Fourth quarter trailing 12-month revenue from our top 20 customers increased 45% year over year to $94 million per customer.
Now, as we can see, the net dollar retention rate has accelerated. It's going up, and it will continue to keep going up. This is because they keep on creating so much value for the customers that they onboard. We can see the incremental amount of money spent by existing customers keeps on improving. This is not because the product keeps improving. This is because the product fundamentally transforms the companies that Palantir onboard as customers. In the clip I'm going to play you now from the earnings call, Alex Karp tells you about companies fundamentally restructuring themselves to fit the ontology. Let's hear what he has to say.
And it's like, and they're like, they've reshaped their org to absorb our product. And like we've never had anything like, and it's just.
So the value creation and how the value extraction companies get from using the ontology is absolutely immense. It is insane and it is unmatched. It is magical, as management said, right? But another important thing, that another very, very interesting aspect of this growth is that the total customer count is not actually up by that much. As we can see here, the total customer count is up on a quarter-to-quarter basis by about 40 customers, right? So it's not that much. They're doing this and they're delivering these numbers on 954 customers. We're gonna get back into that. But Alex Karp had a very interesting point in terms of this and in terms of the value creation. I'm gonna play you this clip now, but it's very interesting to hear his thoughts on how revenue improvements and revenue acceleration comes not from onboarding more customers, but comes from getting more money out of existing customers and comes from increasing the total amount they can gain from their contracts. Let's hear what he has to say.
If you look at you look at our numbers very closely, what you will see is inexplicable growth in revenue, but not inexplicable growth in customers. And it's inexplicable growth in revenue because customers that are serious are putting a lot of their most important problems in our hands. And then the value creation, we're downstream from that, but the value creation is so large. So it's both, it's not just that you get more problems. It's that you solve them in a way that is determinative for the business, and then they pay you a lot more. And then there's also just this consensus, right or wrong, that the alternatives to us are not great.
So Palantir does not rely on increasing their amount of customers. They rely on increasing the value that their customers can extract from the ontology. As they do this, they get incrementally more value out of this. So Palantir can get a higher share of the value that they create over time. This has been one of my key elements of my thesis. This quarter and this result is just a thesis confirming result. In terms of gauging how much value companies can get from the ontology, I've used many examples in my previous videos. You can look at the AIP cons and the testimonies of their customers. But an interesting way to gauge this, and an interesting example from the earnings call from Shyam Sankar, I'm going to play you now, where he talks about how the ontology fundamentally transforms productivity on their customers and on military behalf. Let's hear what he has to say.
At one shipbuilder, we took planning from 160 hours of effort to 10 minutes. At a shipyard, we took material review from weeks to less than an hour. But most exciting to me is proving what we always believed to be true, that AI will create jobs. This is Jevons paradox in action. Other warp speed wins. One customer, making a mature weapon system at full rate production, was able to improve root cause analysis coverage from less than 20% to over 99% in less than a week. On the other end, a different customer making a brand new weapon system that is still constantly changing designs was able to see a 40x improvement in throughput with a production system that scales with the design velocity rather than breaking under it.
So apart from Europe falling behind, there's not much nuance in this earnings report and this earnings call. It is just a manifestation of pure dominance. But however, the picture is still emerging of a Europe that is not participating in the enormous value creation that AI integration allows, with 137% growth in US commercial versus 82% growth in international commercial. This shows that America is leading the way of AI adoption. Palantir is a company that through ontology creates massive efficiency gains for customers, where parallel processes that were previously isolated and siloed gain the ability to communicate with each other and automate enterprise processes. Alex Karp mentioned and explained Palantir as being implementation and an orchestration machine. So it really is an implementation of processes and an orchestration of these processes optimization machine. And because they incrementally improve the value that they create through this implementation and orchestration and automation, they can get a larger pie of this value that they create, right? So what does this mean? This means that there is a huge demand on Palantir's ontology. And it was mentioned in a CNBC clip that they're focusing their efforts on American companies because that's where the least friction is. They can choose where they want to put their focus. They are in such a privileged position that they can choose their customers. They can choose who they choose to work with. And now when you were playing the clip of their 2026 guidance, keep this in mind. Please do keep this in mind. They can decide who they want to work with. Let's hear management on 2026 guidance.
For full year 2026, we expect revenue of between 7.182 and 7.198 billion, U.S. commercial revenue in excess of 3.144 billion, representing a growth rate of at least 115%, adjusted income from operations of between 4.126 and 4.142 billion, adjusted free cash flow of between 3.925 and 4.125 billion, and GAAP operating income and net income in each quarter of this year.
So they beat on both earnings and they beat massively on guidance. They've beat incrementally on guidance. Their guidance is much higher than the street had expected. Now, this is actually interesting because Palantir knows very well their backlog. They are very well aware of what amount of customers are coming in because they have such a good grasp on their backlog and on this demand of their products, right? Alex Karp said that they are in such a privileged position that they can choose who they want to work with. Which means, in my opinion, that they're likely to beat on these guidance estimates. They're more likely to beat than they are to miss. They're very unlikely to miss, in my opinion. They are highly likely to beat because they have such high control in terms of their customers. They choose who they choose to work with. They can keep on gaining more incremental value from existing customers. And what this does lead me to is to update my valuation model for the company. It forces me to, right? I have to. Now, the midpoint of Palantir's 2026 adjusted free cash flow guidance is $4 billion. I think they're gonna beat on this. I think they're gonna beat on this by a huge margin, right? But I'm gonna put the midpoint in to be sort of conservative. I've put a terminal growth rate of 0% to be conservative and a discount rate of 10% to be conservative. What this does is, with the current share price after today's market open of $164 a share, it implies a compounded free cash flow growth rate of 34% over the next 10 years. Now, I do think that this is highly likely, which is insane to say, right? This company can actually manage to do this. This company can very well do this because they're likely to beat on their free cash flow estimates. They're very likely to do this, right? And they are growing right now at 70%, guiding for 60% growth next year. I do think that compounded, in terms of compounding the growth rate from $4 billion, they sure can deliver 34% free cash flow compound annual growth rate over the next 10 years. Now, why is this? For the value creation that Palantir delivers through the ontology, they basically are a monopoly. They have no competition with the ontology. Now, other companies try to deploy and integrate AI in workflows, right? So you have other companies doing this, but no company does the ontology quite like Palantir does it, which is why they are in such a privileged situation right now, where they can choose who they want to work with, where they can choose to focus on the US because there's much less friction there, right? But they are basically a monopoly in terms of ontology. And the market is so unpenetrated for the ontology. With 954 customers in Q4 2025, I think that they have such a long runway for growth. Compare that to the amount of companies of other SaaS companies such as Microsoft, Salesforce, just generally, so they have so many more customers and deliver such less value compared to Palantir, right? The ontology, as we've seen in this video, leads you not only to collapsing time spent on tasks, but incremental value creation. It means, and it yields immense efficiency yields for their customers. With AI forward deployed engineers, their margins will increase. They will become more profitable. Now they have over 50% free cash flow margins for this year, which is insane, right? We can see right here that their full year free cash flow margin is 51%. Now, obviously, this is sort of misleading with their stock-based compensation, but with AI FTEs and with decreasing stock-based compensation, this will become more representative with time with the company's overall owner earnings. Now, this is not a 51% owner earnings rate, margin. This is a 51% adjusted free cash flow margin. They do not calculate the stock-based compensation into it, which waters down these margins and waters down the free cash flow. The value that you get as an investor from Palantir right now is not the free cash flow passed back to you. That's the point, and that's what's going to happen in the future, but not right now. Right now, they're focused on investing into AIP. They're focused on improving their platform. They're focused on just executing and dominating. And over time, you will see exponential free cash flow creation. We can see margins improving with time. We can see free cash flow guidance almost being double of what it is this year. Their free cash flow for 2025 was 2.2 billion. For next year, is the midpoint is $4 billion, and you know they're gonna beat that. Just know they're gonna beat that. So with all these things in mind, I do think Palantir can compound their annual growth over the next 10 years at a 34% rate at the minimum. I think they can actually outdo this because this company is a fundamental component in AI integration for the enterprise, for the state. and they can automate these processes with AI FDEs. They are a monopoly and they have such a long runway for growth with less than 1,000 customers. Now you could argue, obviously, some of their customers pay so much money, some of their customers are huge customers, right? And they can choose who they want to work with. Keep that in mind. In the future, they don't have to choose who they work with. They can just automate all these integration processes. But right now, they're in a position where they can choose who they want to work with, which is so privileged. They have no competition, they have such a long runway for growth, and they're executing so well. So thank you for watching this video. Now keep in mind, this isn't investment advice. This is just my opinion. I speak on my own behalf. I am an employee of NewDeal Invest, and NewDeal Invest holds shares of Palantir, but I am speaking on my own behalf and not behalf on NewDeal Invest. This is my opinion, and this has been my opinion since Q1 2024, where I first purchased into the stock. And I think I'm gonna see exponential growth because of the fantastic position the company is in. Thank you for watching. I appreciate your time, and I'll see you in the next one.